What do you do when you're a Bitcoin long-term holder? You hold on to your coins for more than 155 days. That's what, in fact, these persistent hands of the market, known as the Bitcoin investors, who have been holding onto their coins for more than 155 days, have a significant influence on the cryptocurrency's supply dynamics. What sets the Bitcoin long-term holders apart from the shorter-term holders is their behavior. While STHs often react to FUD and FOMO events and sell their coins, LTHs don't quickly sell their coins regardless of what's happening in the broader sector. So when the STHs sell, it's something to note, and that's exactly what Glassnode, an on-chain analytics firm, has been tracking. In a new report, Glassnode discussed the impact of the LTHs on the cryptocurrency's supply dynamics and used the LTH market inflation rate metric to do so. This metric shows the annualized rate of Bitcoin accumulation or distribution by LTHs relative to daily miner issuance. It helps identify periods of net accumulation where LTHs are effectively removing Bitcoin from the market, and periods of net distribution where LTHs add to the market's sell-side pressure. Now that we know how to track the behavior of the LTHs, let's take a look at how the trend in the BTC LTH market inflation rate has been 2017 to 17, and historically, the cryptocurrency's price has tended to reach a state of equilibrium and potentially even a top when the LTH distribution has peaked. This trend is reflected in my graph below, which shows the LTH market inflation rate over the past several years, and the BTC inflation rate, which is basically the amount that the miners are introducing into the circulating supply by solving blocks and receiving rewards for them. As you can see, when the LTH market inflation rate equals 0%, these hodlers are accumulating amounts exactly equal to what the miners are issuing. This implies that the indicator below the 0% mark suggests the LTHs are pulling coins out of the supply, while it being above is a sign that they are either distributing or just not buying enough to absorb what the miners are producing. So the graph shows that historically the cryptocurrency's price has tended to reach a state of equilibrium and potentially even a top when the LTH distribution has peaked. This trend is reflected in the graph below, which shows the LTH market inflation rate over the past several years and the BTC inflation rate. And now that we know how to track the behavior of the LTHs, let's take a look at what this could mean for the market. According to Glassnode, the trend in the LTH market inflation rate indicates that we are in an early phase of a distribution cycle, with about 30% completed. This suggests significant activity ahead within the program in the current cycle until we achieve a market equilibrium point from the supply and demand perspective and potential price tops. And so what does this mean for Bitcoin? Well, it means that the cryptocurrency's price could potentially continue to rise or fall, depending on the actions of the LTHs and the broader market. But one thing is for sure, the LTHs are an important factor to consider when trying to predict the future of Bitcoin. With that said, thanks for watching, and until next time,